we talked a lot about in terms of Reg CF, increasing the cap 5 million for every 12 months to 20 million, up to that much, as well as for Reg A, increasing the cap from a 75 million max to 150 million.
Do you think that this is really useful? What's the reasoning behind?
So on the investment crowdfunding side, we take a look at the daily data at King's Crowd. I actually pulled it up this morning just to see. And zooming out, it's really impressive. So Reg CF, since 2016, there have been more than 8,700 offerings. Compare that with some of the opening remarks, right, where IPOs have been on the decline. And this is just a great opportunity to get more of those average American investors to be able to have access to some of these opportunities. Now, some of the other interesting trends along that lines are that the way I think of it is there's kind of two different companies that utilize investment crowdfunding. But when you take a look at crowdfunding, there are those companies that are trying to be the next unicorn, venture-backed, IPO-type companies, those high-growth companies, and they're absolutely using crowdfunding. We've seen multiple companies over the past few years raise their max under regulation crowdfunding and even max out under regulation A, which allows them to go up to 75 million. But the other side of it is allowing some of these smaller businesses, these businesses that perhaps don't appeal as much to venture capital or traditional angel, and they are also being able to raise capital. And so we see a lot of that in the market as well. Now, in terms of the types of financings and some of the interesting things, because the types of businesses vary that use crowdfunding, we see that typically over the past few years, it's been a breakdown of around 90% of these offerings are being done under equity, and about 10% are being done via debt and revenue-based financing. So these are a lot of the different trends that we're seeing in terms of regulation investment crowdfunding and also across regulation A, but it's just in terms of the amount of capital raised, right? This has been around for only 8 years at this point in time. This is something, right, that was introduced in May of 2016 for Reg CF. There's now been more than $2.2 billion raised for more than 2 million Americans, and it really is opening up the aperture, to use some of your vernacular, to allow more people to be able to participate. So when we talk about accredited versus unaccredited investors, both of these people, regardless of their backgrounds, are able to invest in these businesses. We saw a huge influx in terms of higher quality companies when the Reg CF cap was increased from the 1.07 to the 5 million. That brought in new issuers to the space that previously wrote off 1 million as too small of an amount to be worth their time. We actually support raising that cap to even 10 or 20 million, where we think there's still a huge gap in opportunity there, where more of these even venture-backable companies would be open to Reg CF as an opportunity to raise perhaps seed, Series A, and perhaps later growth rounds using Reg CF, which would bring more opportunities to the average Americans and also more diverse funding opportunities for the founders.
As a VC, and I've run multiple VC funds, I don't love crowdfunding for highly scalable digital electronic company, to digital technology companies. But I'll tell you, if I were opening a pizza parlor, a bar, a laundromat, a local retail store, I would absolutely crowdfund it myself, because I want to have people in my community who feel like they are owners in that company, and they want to bring their business, they want to tell their friends, it is a great tool. And so I think it's a great tool. It's just not a great tool for every problem.
Yeah, and can I build on that? The idea that every investor expects the same amount of return that was talked about on the prior panel, and that's just not the case.
No.
Really, what people expect, investors expect if every one of us was an investor, we all have different expectations. But certainly at the micro level, at the community level, the expectation of many investors is not necessarily 20, 30x returns. The expectation is, I don't want this company that's in my community to disappear. Supporting your community is a very difficult proposition. In certain underserved communities, it's very difficult to raise money and to deploy capital locally, because the rules do not support the idea that retail investors can get exposure to pooled investment vehicles. So there's not really a workable path. There are a few sort of appendages in the rules that technically support that, but they're not really viable. And so I think what would be ideal is to find ways, and I know Acting Chair Ueda has spoken about this, to find ways to get retail investor access to the pooled investment opportunities. And I think, certainly at that micro level, where I think it matters most, where it's not necessarily purely profit driven, that is a blank area in the regulatory framework. And as I said, there are some technical ways that can work, but they're not really viable at this stage.
And incidentally, the data on fraud and investment crowdfunding, in the 8,000 plus deals that have happened since 2016, there was one incidence of fraud. That's it. So those investors are doing pretty well.
Last week, I was down in Washington, D.C. So what we were discussing with the SEC were different regulations and different capital raising factors that impact capital raising for small businesses. This was the SEC's 44th annual Small Business Forum. They invited myself to basically represent investment crowdfunding for the industry. So that's everything that was Regulation CF and Regulation A. We talked about a lot of great topics. And in terms of Reg CF, there's a lot of proposed changes that are out there. So that goes from increasing the cap instead of being able to be 5 million for every 12 months to 20 million, up to that much, as well as for Reg A, increasing the cap from a 75 million max to 150 million, to also the lower end of Reg CF.
Some are advocating to increase the Reg CF max from 5 million to 20 million, and Reg A from going over to go over 75 million. But when I look at the data, it's very rare to actually see Reg CF companies that hit 5 million, go over 5 million. Even rarer to see Reg A companies that hit 75 million. I think I've come across one. There may be more, but I've seen only one. Do you think that this is really useful? What's the reasoning behind